Okay, well, the second part in a series. Hopefully, this isn't too painful for you guys. It's an interesting subject to me just because, I'm 54 years old now. I've tried out all kinds of different business opportunities, in agriculture and others too. And they've been set up in, I've had joint ventures. I've been a sole proprietor. I've set up several corporations. We currently are running a limited liability company with our outfitting business. Not that I jump in and jump out. I mean, I've been running this last business for 25 years. But hopefully bring enough some real experience to this to make it worthwhile. I'm not just talking out of a textbook. The experience is real. I've made a lot of mistakes over those my business career, and there's nothing like a few hard knocks to really learn something. So anyway, we're visiting. This is part 2 of business organizations, and we're going to talk about, first of all, starting off with corporations. Okay. Now, first of all, a corporation is a separate legal entity, just like you and I, as individuals, are separate legal entities. I mean, we can be sued as an individual. A corporation can be sued, and they also can enter into contracts as we can as individuals. A corporation can enter into contracts just like an individual. The IRS treats them as individuals because they can bargain as a corporation. They can be held liable as a corporation, just like we can as individuals. So it is a legal entity into itself. Each state has similar, but they might be a little bit different. The laws, you have to incorporate at the state level. A lot of businesses incorporate in Wyoming because we have no state income tax. Texas doesn't, Alaska doesn't, a couple of other states don't either. I think there's 5 states that don't have any form of income tax. So it's a huge thing to incorporate your business within the state of Wyoming or one of those states that don't charge income tax. But you must operate within the realm of those state laws that you're incorporated in. Now, instead of partners, or in the case of a sole proprietor, we call the people involved in the corporation, in this entity into itself, we call them shareholders. Okay, and they hold shares of stock. That's why we call them shareholders. So, there may be 10 shares within a business, say. Maybe a lot more than that. But I mean, at the beginning, we're gonna issue shares of stock. If I have 1 share of 10 that are out there in a privately held corporation, then I own 10% of the business. It's that simple. So we can easily determine ownership and percentages and things like that. Okay. Shareholders in a corporation are liable only to the extent of their investment. So if I own that 10%, then I am liable for 10%. And I'm liable for the investment in that corporation of that 10%. Does that make sense? Okay. Hope so. Nobody's asking any questions here. Okay. Forming a farm corporation. You file the application, reserving the name for the corporation. Of course, you can't have the same name as somebody else. There may be some other paperwork as far as name goes that you want to file with the state. We've had to do that on several of our business names. Um, you need to draft a pre-incorporation agreement outlining major rights and duties of each one of the parties. Usually when we're talking about farms and ranches, again, the media has got on the bandwagon, as I pointed out in the last video, is that, it's all, this evil corporate farming. 95% of all farms are run by families. But because of taxes and some other advantages, most of us have actually incorporated because of liability, taxation, and things like that. Okay, so you would draft a pre-incorporation agreement from start to finish of this whole thing. It would be an advantageous unless you've got one of your members that is a lawyer, and even in that, if that is the occurrence, then I would have somebody else looking over the shoulder or actually doing the drafting of this of all these agreements within the incorporation of this business. Okay, you need to prepare and file the articles of incorporation with the state. So in our case, it'd be Wyoming if you're from out of state with your state. You turn the property or cash over to the corporation in exchange for the shares of stock. You get a certificate, it's maybe a little bit different than owning shares on the New York Stock Exchange or the NASDAQ or any of the other ones. But it's going to be a certificate that says, hey, Todd Jones or Mary Mercer or Heath Horniker or Marty Finch is the owner of 10 shares of stock in, Paint Rock Farming Enterprises. Maybe this is the Incorporated is the name of the business. Shareholders meet to organize and elect the directors. So you're going to have a board of directors, and if there's just a few of you, you're going to be more than likely the board of directors, right? And the directors elect officers, adopt bylaws, and begin the business. Okay, and again, a lawyer that deals with this on a regular basis is going to take you through this step by step. Always, when you select somebody like this, and you're going to need somebody that's a legal expert. Have somebody that you recognize as a teacher that you want to learn about these things from start to finish. If you don't, you shouldn't be in business, really. It's no different than an investment advisor. You don't want them to invest your money. You want them to teach you how this process is done so that you understand it. You should never get into something you don't understand. I mean, I see people within our outfitting business jumping in all the time, and it's no different than farming. I mean, you see that too. People get in and out of these businesses and they have no idea what is involved in them. I mean, I'm sure most of you can have heard stories about that. I mean, there's some quick studies out there, and they do, after some disappointments and things like that, they finally get going and stuff. But you can do a lot more than that. There's two types of corporations. One of them is a C Corp, or C Corporation is a regular corporation. And we're going to talk here more about the S Corporation. It's a tax adoption corporation, to be specific. Okay, IRS recognizes them as an S Corp, and there's some things we're going to point out here that are different than a C Corp. Most agricultural businesses, farming and ranching, are, if they're going to be incorporated, are S Corps. Okay. Number one, they can't have more than 75 shareholders. Okay. They're a more simplified form of a corporation, and one of those being that you can only have 75 shareholders. And most families are, the family units are less than 75, so it fits us pretty good. I mean, you might have, if you got more than 75, holy mackerel, within a close-knit family. Shareholders must be U.S. citizens. You can't have foreign nationals and things like that. And you can in a C corp. Okay, so we're pointing out the differences. Estates or certain types of trusts can own shares in corporations depending on the corporation, but as a S corp, trusts and estates cannot hold shares. Okay, and only U.S. citizens can hold shares in an S corp. There's only one class of stock, so you can get preferred stock, common stock, all that kind of stuff for a C corp, and we may talk about that a little bit, but there is definitely some difference, voting class stock and all that. So in an S corp, they're all the same. Every share is a share. It's just a share is a share is a share. All shareholders must agree to form the S corp. I mean, that kind of makes sense, doesn't it? If you got one holdout, then you can't form an S corp. Nor would you want that person within your business if you had 4 out of 5 that wanted to form an S corp. So, I mean, I'm really good at pointing out the obvious. The advantages of corporations when we talk about either an S corp or a C corp or an S corp are limited liability for the shareholders. As we pointed out before, the liability is to the extent of this number of shares. Okay, if I have 1 share out of 10, again for that example, I have a 10% liability. I am liable for that, whatever those shares are worth. Okay, this advantage may be negated if a shareholder is required to personally sign a note to borrow funds. Okay, and this is where I have signed notes for our S corp, and the bank wants me to, as an entity, Todd Jones, assign the liability to the entity Todd Jones, and also the entity Paint Rock Adventures Incorporated, and I could sign for both of those. But when I get capital from the bank, that's what I mean. That's a negotiable point, but it's very typical for you to actually sign individually too. So be careful about that. Okay, you don't have to, and it's negotiated. They could say, well, we're not going to give you the money then unless you do. So you may be forced to, and you don't want to sign away all your liability. The corporation, like a partnership, allows for several individuals to pool their resources. Again, we can bring in people. We can have capital shareholders. We can have, people that are providing most of the labor. We can have people with different expertise levels, in different fields of expertise. We can bring them together in a corporation. It does. That the major advantage of corporation is it provides business continuity. And again, continuity in regards to transferring. How do I transfer the business to the next generation or to another entity or person? Okay. All right. Disadvantages of a corporation: it's costly to form and maintain. This has actually come down, but I would say it probably you have to have at least an annual meeting. You got to get the board of directors together. These day and age, you can do it virtually if you want to. If the family, my family is all over the country, and if I want to set a date and get together as a board of directors meeting, We can do that, on a Google Hangout or on Skype or one of those different FaceTime with Apple. But there's the disadvantage is that it's just more costly to form and maintain. You absolutely do not do it by yourself. You need legal advice. It's going to be, again, it relates to the cost issue. If you're undercapitalized, which most small businesses are, as we talked about in our cash flow unit, the number one reason why businesses fail is not because of profitability, it's cash flow, not having the cash flow when you need it. Inflows, outflows, we can take care of that one. Shareholders and directors meetings must be held. They have to be. Minutes must be documented, and so it's not something that you can overlook. Okay, it's a great. If you plan your business and you want to form a corporation, my advice to you, even if you're just a sole proprietorship, is you write down the notes. You act like you're a corporation. You have a board of directors meeting. Maybe it's you and your wife and your dog, probably, or maybe you got a mule. They're pretty smart. So anyway, you get together and you write down the minutes of the meeting and your discussion and what you decided, just like you would in a board of directors meeting. And then when you get large enough so that you bring in some more people, or you want to limit your liability and that sort of thing, and you form this corporation, then it's just a habit that you already are doing. Make sense? Oops. Let me see here. Getting a little wild here. Sorry about that. The taxes in the C Corp. Okay, a C corporation pays taxes on its earnings before dividends are distributed. The shareholders then pay taxes on the dividends at their individual rates. Okay, and if you don't know what a dividend is, dividends are shareholders get together and they say, okay, we've got a profit. If you don't have a profit, you can't have dividends. So dividends are paid out of profits, and they may determine that we're gonna give say $100 per share. We got 10 shares. Okay, Todd's got 1 share, so we have a dividend paid of $100 to him, and the other nine shares that are out there within our business, they're each going to get $100 per share. We decide that out of the profits. So, okay, I'm going to be taxed on that. Okay, before that happens, the C Corp is going to file from their books a profit statement, and they must pay taxes at the corporate rate. And there's a difference between corporate rates and individual rates. And you'll have to pay it at a state and federal level. Okay, so the corporation pays their taxes on their profits, if there is one. And then if it's decided that dividends are going to be paid to the shareholders, then the individual shareholders pay taxes. And this is what with a C Corp, what we refer to that commonly is double taxation. So a C Corp is taxed at the corporate level and the individual level when you have distributions of dividends. Double taxation. Okay. If shareholders are employees, their salaries and benefits can be charged as expenses to the corporations, but these expenses must be reasonable. So, if you got I mean, this sounds outlandish, but it can't be out of line with what is going on normally. If you're paying yourself $500,000 and the typical incorporated farmer has a wage of $50,000, then that's a red flag, and something that you could be brought up on, and if it's out of reasonable wages. Okay, so be careful with that. Okay, taxes on the S corp, they're treated completely different. S corp is taxed just like the partnership. If you remember back on how we described how the partnership was taxed, the partnership is taxed at the individual's rate. So if I'm at 15% as a shareholder in this corporation, then the profits, I will pay on the profits that's reported by the actual corporation, and at my individual rate. Now, we still, as a corporation, as an S corp, we still file a form with the IRS that shows that we have this much profit or loss, okay? But we don't pay on that profit as a corporation. That would actually funnel down to my individual return, and I would pay at my individual rate. So it's a single. It's not double taxation. It's a single taxation, just like your partnership was. So there's an advantage, isn't it? Okay, that's corporations in a nutshell. Now, limited liability companies is something that we actually, the last business, or the one that we're functioning as right now, is what we run at this point. And there's some legal types of things. You still file with your state to create a limited liability company. It can resemble a partnership. They're not called partners, they're called members. That's the distinguishing thing. They can function very much like a partnership. You can bring people together that have different expertise levels, different things they contribute to the business, all that kind of stuff. Secondly, liability is limited to the assets of the LLC. So again, kind of like a corporation, what lawyers talk about is piercing the veil to get at the individuals. Usually assets are held by individuals, or the largest amount of them are, especially in small business. It's a layer that must be gotten through of liability. You're only liable for the assets of that LLC. Now, as we explained before, in the corporate sense, we can sign individually for debt or liability, and then that gives lawsuits and liability a piercing into our individual assets, and that can be done here too. Of course, it does limit our liabilities to a certain extent, just like a corporation does. This LLC does. An LLC can have any number of members, all of whom can participate in the management. Okay, one of the somewhat distinguishing. Ownership is distributed according to fair market value of contributed assets. Okay, so it would be like a partnership where, I contributed at the beginning of the partnership this much, you contributed this much, and then we percentage it out. Net farm income or net ranch income from an LLC is passed to the members, who pay taxes at their individual rate. There's no double taxation. Okay. I would say this too. At the beginning of a LLC, you can elect to operate under tax law, partnership tax law, or you can elect to operate under S corporation tax law. And we actually operate under S corporation. There's just some minor things there that, because everything goes back to the individual again, in those circumstances, that so anyway, that's one of the reasons that we chose a S corp functioning. It's an LLC functioning like for taxes as a S corp, and we file all the same forms and all that kind of stuff with the IRS as an S corp would. Anyway, just a minor thing that if you set up one of these, that you would have to jump through that hoop and elect one or the other. An LLC does not automatically continue in the event of the death of a member. Okay, it can be set up within the bylaws of an LLC that it would, but it doesn't automatically continue. I mean, that might be reason for dissolution. In our LLC, we've got actually shares or memberships, and those can be transferred like shares in a corporation. So the continuity is, you know, it's a little bit convoluted compared to a corporation, but it's a certificate of membership. It's a percentage, and it can be a benefactor in my will. It can, you know, or I can sell it. I can do a lot of things in there. So it's not that hard to transfer. So LLC, it usually doesn't cost as much to set up, and many farms and ranches are being set up this way. So a real alternative. I mean, it doesn't act too much different than a corporation in a lot of ways. It limits your liability, of course, and those sorts of things. I'm going to let you, so this doesn't get too long, is read the things on a cooperative. Most of us in agriculture deal with cooperatives. You know, there's the farmers co-op. They may deal in fertilizer and fuel and implements and sharing and things like that at our local level. And we would be members of that co-op, and we may even see some profits distributed within that realm. So I mean, up here in the Bighorn Basin, we're a member of the telephone co-op. We're a member of the Bighorn Co-op, which is a farmers co-op. We also have electrical co-op. I mean, three of them that I can think of, and we actually get profits off of that. You know, capital credits, and then the board of directors every once in a while decides they're going to pay us some of those back to us as owners. We're owners in that thing. But anyway, I'm going to let you read that, because this is, like I said, getting too long, and don't want to have you sit there and just take this in too much longer. But co-ops can be, you know, a great thing. You know, one of the biggest ones that I can give you an example, Sun-Kissed Oranges is actually a co-op, and that's where a whole bunch of growers got together and formed so they could take advantage of economies of scale, so they could buy inputs cheaper. They have access to bigger markets, you know, distribution channels and all that kind of stuff. You know, as individual units of a bigger industry, we don't have access to the prices or the markets. But if we put ourselves together, one of my neighbors here is involved, and I go over and help them quite a bit, but in a lamb co-op. And as, you know, all these producers within, you know, the Rocky Mountains that are members of the lamb co-op, they can get better prices for their inputs, and they can get better prices for their output lambs, typically, if they go together and take advantage of economies of scale. But again, take a look at that and see what you think, and we'll go from there. I just want to say that I may not see you, I may not know you, but I have gotten to know you to at least a small degree, and I always enjoy this class. but especially have enjoyed this semester, and I wish you the best of luck. It doesn't end here. I mean, I love business, um, and being in business, it's a challenge. Every day, things, you have to think on your feet and things like that. But if you were to ever have any questions about any of this material or anything else as far as that goes, um, you know, just give me a call. I love to troubleshoot, brainstorm, and I think you'll probably learn this, that you can't do it alone. You just can't. You can't, especially in this day and age, can't know everything about everything. And um, you need to involve some other people, whether they're partners, whether they're shareholders, whether they're members within your business, and some outside experts, just to do things the right way, and to hopefully limit the amount of mistakes that you make within your business. I wish you the best.